Hello, guys. How you doing? I want to welcome you guys to the room. Go ahead and actually join us. Go ahead, come on into the room now, guys. Go ahead. We're going to get started shortly. We're going to get started shortly, but go ahead and actually come on in the room. Let's go ahead and actually get started a little bit, guys. Welcome, welcome, welcome. Go ahead and grab pen and pad. Guys, let us know where you are chiming in from, okay? Let us know where you're chiming in from, guys. Welcome, welcome, welcome. Let us know where you're chiming in from. Go ahead and actually give us your city that you're chiming in from, where you're at. Go ahead and actually give us that. Do appreciate it if you go ahead and actually do so, okay? Go ahead and actually do that. Guys, wait, guys, we're going to throw up a couple more action signs here, but go ahead and actually do it. We're going to get started shortly, about less than a minute. We're going to get started less than a minute, all right? Welcome, 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 welcome. I'm going to actually keep this up for actually right now, okay? I'm going to keep this up for right now, guys. Go ahead and actually welcome from Maryland. I see you're all the way from Maryland. Welcome to the webinar here. Welcome, welcome, welcome. As you continue to actually come aboard Rocky Mount, welcome. Welcome, guys. You're going to have time right now because before we get started, you're going to have time right now to actually go ahead and give us your, I say boss man with the beard. All right, Kurt. You're going to have actually time, guys, to give us your watch party. I'm sorry, share with your watch parties and things of that nature. If you want to do that, you can do that now. Go ahead and actually do that if you want to. Go ahead, go ahead, go ahead, go ahead, go ahead. Go ahead and actually do that, guys. Welcome, welcome, welcome. Go ahead and grab your pen and pad because you're going to need to write down some information. I'm not going to do Q&A tonight. I might do Q&A another night, but I'm not going to do Q&A tonight. But, guys, I'm going to be giving out a lot of information, okay? And I'm going to give you some instructions at the end of the presentation, okay? I'm going to give you some instructions at the end of the presentation, guys. But we want you to know, guys, about how a home-based business can help you. That's what we want you to end up knowing, guys. We've been hearing a whole lot about the tax deduction of this and tax deduction of that. So we're getting ready to help you out, okay? And interactive, guys. If you have any questions and comments, you're going to be able to actually do so, okay? Go ahead and start your watch parties. For those that's a part of the team, you can start your watch parties also as well because of less than about 30 seconds. We're going to go ahead and get started all the way from Raleigh. Welcome, welcome, welcome. Welcome, guys. We got people from all over. Yeah, I've got people from all over. Welcome, welcome, welcome to the presentation. Go ahead, come on in, guys. Come on in. Come on in. Okay, come on in. As you come on in, grab a pen, grab pad. Come on in, grab pen and pad. We are live on several different group pages on Facebook. We're also live on YouTube also as well. So I'm going ahead and actually come on in, guys, and grab the pen and paper. About actually 20 more, seconds. I'm going to go ahead and get started. About 20 more seconds to go ahead and get started, guys, with this presentation, okay? But thank you for actually joining. I'm trying to see what camera I'm actually looking at actually real quick as far as doing it, guys. But welcome, 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 guys. Pen and pad, 10 more seconds. We're going to go ahead and get started because I'm not going to keep you long, but I want to give you some information, okay? But I want to give you some information. Welcome to you also as well, guys. Let's go ahead and give you some of the information, guys. Okay, guys, I want to actually talk actually real quick, guys, to you first before we actually really get on into the presentation. You know, this week has been an awesome week, right? It's been an awesome week, guys, with what's actually going on with, you know, the economy and what's going on, guys, on the news. And there's been an awesome conversation. People have been doing like this and talking. But I like the awesome part of it because all of a sudden people have found out, okay, that there are different ways that they can avoid taxation. For some reason, all of a sudden, people found out that there's ways that they can avoid taxation, okay, like they never knew before. We've been talking about it from years after years and years of different ways that you can do that. It's all about saving money. It's all about saving money, guys. And tonight, you're getting ready to actually, see why on earth have I always said that basically have a home-based business is the best way to basically save money on taxes, since we kind of understand about this tax avoidance thing, right? But before I actually get there, guys, I do understand a lot of people do not know who I am. So let me introduce myself to some of you guys. My name is Terrence Hawkins, guys. I am I'm the founder of Hawkins Accounting and Tax Service, guys. My wife and I, here, guys, the company's been in business for 24 plus years now. Okay, 24 plus years. I'm so happy to actually say my son's actually working with the company as well. We're excited about that, and actually going on. I also am an enrolled agent. Now, those that do not know what an enrolled agent is, I do have the definition on the screen here. It basically says, guys, that they are the only federal licensed tax practitioner, who specialize in taxations and also have unlimited rights to represent taxpayers before the IRS. Enrolled agents are required to complete many hours of continuing education each year to ensure that they are up to date on the constantly changing tax code, and must abide by code of ethics. When you need a true tax professional, people say see an enrolled agent. And to some, enrolled agents are America's tax expert. Okay, guys. I also, guys, sit on a couple of different boards. I sit on the National Association of Enrolled Agents. I'm a part of the North Carolina Society of Enrolled Agents. I am a proud member of, alumni of the University of North Carolina in Charlotte and American Tax Society of Tax Problem Solvers. Okay, guys. So that's a little bit about, guys. What I'm really proud of, guys, that I do also is education. I love education. So I do a lot of things on the radio. I've been traveling throughout the country. Here you have to see a picture of when I was on Coffee and Cash Flow. That's ESPN Charlotte, the game. Educating about what we're talking about right now, how to help people to basically save money on taxes. Okay. We learned the other night about tax avoidance. It's nothing but reducing that tax liability, saving money on taxes. And people want to know, how in the world can I do the same thing? And that's what we are going to actually talk about. I'm going to tell you now, the bottom line is this. This is the bottom line, guys. If you do not have a home-based business, I want you to understand that you are paying way too much in taxes. I need you to understand that. If you do not have a home-based business, you're pretty much paying way too much in taxes, but not just home-based business, in business in general. Why? Because, guys, the tax code and taxes favor the business owner. I'm not saying that you don't have special deductions and different types of loopholes and different types of strategies if you do not have one. What I'm saying is it favors the ones that have a business. It's just more write-offs of things that you can do. But a lot of things, guys, is all about tax shelter and the loopholes that you have when you have a home-based business. Okay? Now, here's what it is, guys. Home-based business owners are just taxed differently. You see, our government has passed tax laws, and this has been done a long time ago. It's not like it's something new. It just didn't start, okay? But they've passed tax laws that creates an incredible opportunity for the home-based business owners, okay? It's in there. There are hundreds of potential tax deductions if you have a home-based business. If you do not have one, you just have a W-2, you do have some, but not as many. Okay, and especially as many that's going to help you to reduce your tax liability. Okay, so this is nothing but utilizing the tax code on your behalf. That's what tax avoidance is all about, using legal tax strategies that's already in the tax code to basically reduce your tax liability, which in fact means you're paying less in taxes. Guys, it's not how much you make that really counts, it's how much you keep. Keep more of your hard-earned money. Now, even though there's hundreds of different tax deductions, you don't have to know all hundreds of them. We're not going to even try to go over all hundreds of them, okay? If you at least have a good understanding of 7 deductions, okay, of 7 of deductions, if you have a good understanding of that, guys, you can potentially save $3,000 to $6,000 per year in your taxes. Just a good 7. And guess what we're doing tonight? We're going to go over those 7. Now, when we go over them, here's what I really want you to really, consider and start thinking to yourself. Which items do you have? Everybody does not have all of them. Okay, some people do. But look at yourself. I want you to look at yourself and start thinking about, hey, which one of these items do I have? And then do I know somebody that has some of the other items? Because you need to start thinking of, what do I need to do to position myself to basically start saving money on taxes? So we go into these things. I want you to start thinking about that. And I'm going to ask that a little bit later as well. Here's the first one. If you're taking notes, write it down. Your home office. Your home office. Notice I just didn't say your home. Can't just say, hey, I got a home, so I got a business, so I get a write-offs. Because these are the deductions, guys. If you had a business, you could potentially utilize so you can save yourself some money. Okay? Because some of these eligible write-offs, I know you're actually doing. Okay? You can write off, guys, potentially a portion of your mortgage or your rent. So are you either paying a mortgage or you paying a rent? Somebody should chime in. Yes, I'm doing one. Type in which one are you doing? Are you paying rent or are you paying mortgage? Okay? Because if you're doing that, if you do not have a home-based business, you can potentially be losing money, leaving it on the table. You need to basically be able to learn some strategies to be able to write off a portion of those potentially, right? You got to start thinking that direction. In that place that you're living, do you have heat? Okay? And Teresa said yes. Teresa said she got mortgage. Okay? She got mortgage payment. Potentially to have home-based business writing off. How about the heat that's there? Air conditioning, electricity, natural gas, oil, water, sewer. Again, start to think about, I'm going over just a list of things. Start to think about which one of these do I have some of these? Trash collection, recycling fees, homeowners association dues. Notice that normally you can't write that off. Potentially you can if you had a business. House cleaning, exterior painting, security alarms, maintenance costs are just some of the deductions potentially, guys. Okay? I need you to start really thinking about it, because if you're not writing off, you're leaving money on the table. All you need to know is how. Learn the strategies to be able to do that. And the cool thing about it, guys, is this. The Internal Revenue Service says now that you don't even have to have an entire room that's designated for the home business. You have to have an area. That area could be a room, okay, in your home, but it could be just an area. But it has to be an area that's exclusive for the business. It can't be an area that you have the desk, have the computer at, and everybody comes and they utilize that same PC, that same laptop, the same MacBook. No. It has to be designated for the business. You learn the strategies and do them the right way. Somebody actually type in stuff in comments, the right way, okay? Somebody said the right way. Because if you do it the right way, you can potentially write off a portion of those things, saving yourself a lot of money. If you're not doing this now, you're losing money. Even those that have a home business, if you're not doing this properly, you're losing money. That's your home office as one of the deductions. Let's continue to actually move on for a second, okay? Let's continue to actually move on. So we got that. Here's the next one. Vehicle, okay? Most of everybody may have some type of transportation that they're utilizing themselves. They got a vehicle, okay? Those that do not have a vehicle, you still are getting around. There's certain things that you can do in write-off and getting around in your business. But if you're already driving, how would you like to actually learn some of the strategies to be able to take some of those personal miles and turn those personal miles into business deductions? So guys, with proper documentation, you can combine your personal errands along with your business errands and deduct this year the standard of 58 cents per mile. Now you can do that, guys, as long as the personal errands did not add additional mileage. It's just strategies you have to do. This can potentially be somebody's biggest deduction here, because you're going to go places anyway. How about learning some of the strategies that may be able to help you to write off 50%, 60%, 70% of your miles? Now, you more than likely not going to write off 100% of your miles, okay, in doing that. But there are some ways that you can actually do, guys, to write off a percentage of those. That 58 cents per mile can add up. But let's say you say, Terrence, I don't do a lot of driving and stuff, but I have a vehicle. No problem, because you have an option. You can take what the Internal Revenue Service says. Yes, you can take a mileage deduction, but you can also take the actual cost deduction as well. The actual cost, guys, is basically when you want to depreciate that vehicle. If you want to take the gas receipts, you want to take the maintenance and the miles, you had to get work on it, you pay for the tires, then you got the cleaning, you got all of those things. Those are actual expenses that you're incurring, the property tax on it, all of those things, okay? You can write those things off. for the percentage of use of the vehicle, that you're doing for business. All it is money. Now you're going to do it anyway. See, this is the thing that I like about these. These are things that you're already going to do anyway. You might as well potentially try to actually write that off by having the home business. Might as well do so. And guys, this year, okay, like the other years, there's bonus depreciations. There's ways that you can write off even up to 100% of your vehicle on depreciation. There's certain things that you got to do to qualify for that, right? But even if you don't have that type of vehicle, there's ways you still going to get a bonus depreciation if you want to basically take the actual cost. Now, if your tax professional hadn't told you about that, you have a business, we'll talk about that later, right? We'll talk about that later, right? So, mileage, you have a vehicle, make sure that you start to write those off. It's just another way that you can basically shift your income from a higher tax bracket to a lower tax bracket. And guys, and these are tax shelters again, okay? Which is a part of the tax avoidant family. Let's go to the next one, okay? Let's go to the next one. How about this one? Business trips. Business trips. How many of you guys, I know we're not doing a whole lot of traveling right now, right? But how many have still at least gone somewhere? I see some pictures. Some people are still going different places. They're getting good deals and they're going different places and things of that nature, right? And notice I said business trips. I didn't say vacation. I didn't say just a weekend getaway. I said business trips. See, the Internal Revenue Service, guys, basically said if you properly plan, you have to plan correctly. If you do that, you can potentially write off 100% of your hotel stay, 100% of ground transportation there and back, 100% of tips and gratuities, 50% of your meals, if you plan them correctly. See, the Internal Revenue Service says there's something called business day. You just need to learn how to turn a day into a business day when you're going away. Think about the last place that you did go on vacation to. Did you write that off? And if you did you write off correctly? That's the key right now, right? Because you don't write off correctly and you just misdo certain things. It's not a business trip, but you're writing off. You're going from tax avoidance, as explained now, to tax evasion. Don't want to do that, right? Don't want to do that. But if you're taking trips and you had a business, you could potentially turn those days there into business days. It's not hard to do. Just got to properly plan and write those off. What's the average? Y'all can type in, what's the average vacation cost that somebody, have actually taken? $1,000, $2,000, $3,000. You're taking a lot. How about to be able to take that and stuff and write those things off? Don't you think that can save you some money on taxes? Again, guys, we're just talking about different ways that you can basically shift that income to lower tax bracket and write those things off just by having a home-based business. If you want to talk about tax avoidance, here we go. Having a business, it could be the biggest way to do so. And we just went over a couple of things and we found a lot of money already, right? Let's go with another one. How about business meals? Notice I just didn't say meals, okay? And you can't do entertainment any longer. You used to do that, but just business what? Meals. You see, you need to actually learn strategies to actually be able to write off business meals. And business meals writing off, guys, while conducting business, okay, or before business or after business, you learn the rules, a potential 50%. 50% can that be a write-off? 50%. If you're going out to eat anyway, especially, and think about this for a second. If you're in business with your spouse, and you have business with your spouse and you want to go on date night, we said, no, I want to tell you now, you cannot write off date night because it's a personal expense. Date night is date night. But how about to be able to actually go out to eat with your business partner? And we teach you to talk business and what to keep to do that. And then you can write those off. 50% of those meals. If you're going to eat anyway, if you're going to go out anyway, why not save yourself some money? Why not save yourself some money? Now, don't forget this one. A lot of people sometimes forget this one for some reason. Just ordinary business operating costs. This is just operating the business itself. If you have a home-based business, sometimes it takes, expenditures to operate a business, right? Sometimes people don't want to do it. Like your website. Well, you get to write off. Yes, it's costing the website, but you get to write that off. Okay? You get to write it off. How about certain things that you might currently be actually using right now? Cell phone expenditures. Because today, people need to be able to call you. If that's the number that you have them to call you, you can write off a potential of your cell phone. And there's a way that you can end up writing off 100% of your cell phone service. But you got to know the rules to do it correctly. How about your internet? Most businesses are online. You got to get online. How about writing it off? Are you purchasing leads? Are you doing kind of marketing? Do you have printing costs? You got business cards. You needed a new desk in the home office. Those are just costs. But don't forget this one also, startup costs. There's a cost in starting any type of business, right? Internal Revenue Service that got the first year, you can write up to $5,000 in startup costs. Just need to know the rules. So that startup cost, did you have to go in, because it's an online business, did you have to get a computer? Did you have to get the phone? Did you have to purchase this and purchase this? You might start up and have all this. You're talking about writing off on the first year. How about that? This can be a lot of money as far as doing it. Don't forget that just the cost of the business can potentially be a write-off. Here's one of the ones. I need you to actually write this down and pray this one down. I might spend a little bit more time on this one because I need people to actually really understand this and do this one. Okay? Hire your own children. This is the best one. If you have, guys, a minor child or kids, okay, at least 7 years old, okay, you can employ them in your business. You can employ them in your business in certain ways that you can actually do that, guys. Here's the key thing, though. They're not subject to the child labor laws, okay? Right? They're not, right? No payroll withholding is required if they're under 18. That's why we said in between the age of 7 and 17, right? Because under 18, you don't have to worry about the Social Security taking out, self-employed tax, all of those things, and quarterly 941s. You don't have to worry about any of that, okay? If you do it the right way. How about and the wages that you pay them will be 100% tax deductible as a business expense for you. You'll pay somebody else anyway, and you have to write that off, right? You got to thought about it. If it costs you to basically make money in your business, it can potentially be a business expenditure. Well, if you're paying your child to work for the business, you get to write that off 100%. Now, here's the cool part. Okay, here's the cool part. The income that they earn is 100% tax free if they're in between the age of 7 and 17. Okay, 100% tax free. I mean, the self-employed tax portion, right? Social Security and Medicare. So Social Security and Medicare is 100% tax free. They don't have to match Social Security and Medicare at all, right? Now, you can pay anybody, and they can make up to this year $12,200 and be what? Tax free. But what is that, Terrence? That's the thing called standard deduction. Do you realize that your first $12,200 of the income that you make is really tax free? It's zero tax because it's a deduction, and that deduction is a standard deduction. Now, you're going to be able to choose standard or itemized, but for your kid, their first $12,200 is tax-free. So they don't have to pay federal taxes. They're not paying state taxes. They're not paying Social Security. They're not paying Medicare. And you get to write it off. This is the deduction that you need to know about. You're already giving your kids money for certain things or spending money on your kids for certain things, right? They're in sports and activities. They're in AAU. They're in volleyball and football and basketball and gymnastics and, all of those different things that they're paying. How much do you think people are paying on their kids every single year? They're paying a whole lot more than 12. Now, here's the thing, though. I need to actually tell you here. I know you're going to learn the details later, but here's the thing. You need to actually pay them, okay, pretty much for doing the duty, just like you'll pay somebody else. If they're just handing out flyers for you, would you pay somebody else $12,000 to hand out flyers? No. Okay, so don't try to misuse the laws, guys, because then you get into evasion. Okay, use the laws for what it is. It's hard to basically justify a 7-year-old making $12,000 unless they're doing something monocular. I mean, this is great, right? So based on their age, what you can have them really do in the business, you learn all of those different things. We teach all of those different things about how to do it the right way. But the key part about it is, suppose you can't write off $12,000, but you can write off $5,000. If you can write off $5,000 and your total tax itself for federal and state, let's say just 20% tax rate, that's $1,000 in tax savings. That's $1,000 tax savings. So any of you that's listening to me right now, if you have a child in between the age of 7 and 17, and if you do not have a home-based business, there's a great percentage, big percentage, that you are losing money. You need to learn the rules. You need to actually be able to put this in place so that you can avoid some of that tax liability. You need to be able to do that. Okay? This is a simple one to do. People think it's hard. It's simple to do. It's simple to do. Let's go to the next one. Healthcare costs. Okay, this is the 7th one, I believe it is. Healthcare costs. And I'm not talking about just the healthcare costs for, the Schedule A. You got your some of your co-pays, and then you have, your insurance premiums that you're actually paying off. And then sometimes you can't take that off now, especially because your standard deduction is higher than the itemized deduction, but you want to be able to take something off. Guys, there's another special way that you can be able to do so. One of those ways, I would tell you, involves hiring your spouse. You just got to know the rules. Hiring your spouse, guys, that's a way that you can end up taking up pretty much 100% of your healthcare costs, not just your healthcare insurance. I'm talking about insurance premiums, yes, but how about annual deductibles, your co-pays, your orthodontics, your natural and holistic remedies, even over-the-counter drugs, if done properly. One thing that you're going to actually learn today, if anything, there are major deductions that you can potentially write off if done properly. Somebody type that in the thing. If done properly, just type that in there, okay? Because that's the key. That's the key that keep individual out of trouble. Because a lot of times, people like, what, Terrence, I kind of heard I can write off this. I can write off this, but I got audited by the Internal Revenue Service, and that didn't work out because you might not have done those things properly. Here's the 3 things. The Internal Revenue Service says that you have the intent to generate a profit. Intent. Got to try to make money. You can't have a business just for tax deductions. You need to have a business to make money. And because you're doing that, then you can basically qualify for deductions. Totally different. So number 1, if you have the intent to generate a profit, if you actively participate in the business. Now, what does that mean? That means, guys, it's not passive. Passive income is taxed totally different. Passive income is done totally different. Is passive. You're not actively involved with it. Internal Revenue Service, guys, says in the court case that if you have in between 3 to 5 hours per week, part-time hours per week consistently in your business, it qualifies for actively participating. So if you actively participate, and then, and most important, I always say, you keep proper records. Documentation. So if you have the intent to generate a profit, if you actively participate, and you keep the proper records, you can potentially write off these deductions that I'm talking about. That's all you have to do. And I want to stress the documentation part of it, because do you know, even if you think you have the intent, even if you're actively participating, but if you don't keep those records, do you realize that the Internal Revenue Service could turn down your deductions because you didn't have the proper documentation of those items? You don't want that. And they got 3 years to come back and stuff and audit you. But that's why we teach all of this. Okay? So those are the 7 deductions right there, guys. Home office deductions, mileage deductions, business meals, business trips, business operating deductions. You got son and daughter employment deductions. You got medical expense deductions. All those deductions done properly, guys. On average, it saves an individual's $3,000 to $6,000 a year on average. That's the national average. Some may be a little bit less, some may be a little more. Everybody's situation totally different. That's why you need to be talking to a tax professional that understand these rules and that's doing them correctly at the same time. But these can potentially be some huge deductions for you. Okay, so I hope that what you really got from this, okay, I really hope what you got for this is, number 1, if I really want to save some money on my taxes, one of the ways is having a home-based business. And then if I have a home-based business and if I have the intent to generate a profit, actively participate and keep proper records, there's some things that I can write off. There's hundreds of them that I can write off. But if I just become good at those 7s and see which one of those 7 that I qualify for, I can potentially save myself $3,000 to $6,000 a year. And those that, do not have a business is, your thought process needs to really just be thinking, what business should I get? That's really what you need to be thinking about. What business should I get? And you need to go and search the business that's for you. Every business is not for the same person. And there's a lot of different businesses that is out there. Okay. But I can't actually say, guys, that I've actually partnered with an awesome company that has a business structure that you can do part-time. Okay. Some people do it actually full-time. You can actually do it while you are, working your full-time job because you don't have a lot of time. A lot of people don't have a lot of time. Okay. But the thing that I like about this business is you get the experts, number one, to do exactly what I just talked to you about. You see, I'm happy to actually be, the Money Max actually lead instructor that is involved in educating you on those deductions. Okay, you can use the accident expert thing that they have to see, do I qualify for this one? Do I qualify for this one? How about this? How about this? Why? Because they want to make sure that you're doing it the right way. See, the business just have a financial membership that they call Financial Edge, okay, that you just refer that gives them those information. Now, here's what I want you to actually do about it, okay, guys, because I really like this company, okay, as far as a home-based business, especially for the tax deduction actually strategy. And what you need to do is you need to get back with the person that either referred you this webinar, you may be watching it on their watch party, okay, that they're having, or they have a link, or you may be watching this on YouTube, you may be watching it on one of the links actually that I have or whatever, but get back with a person that you've seen them and, ask them to see a full presentation of MWR Financial so you can see about their company. It's about a 20-minute presentation that they'll probably have to show you and stuff right there. But that company, all you gotta do is refer and you can earn some significant amount of income. And that's another reason why I am referring this company and about your partner actually with them. Okay. So there you have it, guys. I just want to actually come on and stuff and give you a quick presentation about why the home-based business could potentially be your biggest tax deduction, especially if you're trying to avoid some of these taxes that you are paying. Get back with the person that basically shared this presentation with you. Okay. I want you to actually get back with them. And I want you to actually tell them, say, hey, show me that presentation of MWR Financial so I can get linked up with the experts to help me to do it. Even if you already have a business, because even if you already have a business, you want to actually see them so you can see the membership that's going to give you the experts to make sure that you are doing it correctly. Okay, to make sure that you are doing it correctly as well. Okay. Yeah. With that being said, guys, I will be back actually next week with the same actual presentation, guys, educating individuals on why you need a home-based business and why it can be, guys, the best one for you to save yourself a lot of money. Okay. And with that being said, guys, as always, this is T-Hawk and I am out. Have a great day, guys. Goodbye.